Hi friends, good evening. This is Sharma from Training Children. Friends, I am making fourth video of Intraday Series 1. So as all of you know that I have started an Intraday Series 1 for newbies, for people who have no knowledge of stock market and wants to do intraday trading. So for for those people, I have started this initiative that I am making uh, we can say some videos, and through these videos I am going to teach them the basics of stock market so that they can understand what they are doing, what is stock market, what is intraday trading. So friends, in this is our fourth video. There are previous videos. In our previous videos we have talked about some basic level. In first video was the introduction video on this series. uh, right, let me just show you once what all things. And simply friends, it's for everybody who has no knowledge of market and wants to do intraday trading. But before going to intraday trading, one must have some basic knowledge, and this program aims at making your foundation of intraday very very strong. And this is a free video series. uh, Once this, I have started the second video series also, but that's a paid series, and for those who will join my 1 year professional traders program, that series will be for those, right? So those series is just I am making up, that series I will about to start, but that series is typically for those. That's a, we can say, series for people who will join my 1 year professional traders program, right? And I think, I hope most of you are knowing that I have started a 1 year professional traders program at a minimum charges of 1150 rupees only. So if anybody is interested in that, joining that program, one can you know WhatsApp me at my number 9797382772. So this is a different story. This is a different concept. I'm not saying anybody to join that. It's only for those who want to take right knowledge. So friends, in this intraday series one, this is which is a free intraday series. So I am teaching you some basics of stock market, and this is fourth video. And in today's video, we will talk about one important free charting site, because I will just tell you there are free important charting sites. But today I will tell you about one charting site. That's a free charting site, and through that site we will study what is chart, what are stocks, and all that. We will study few things there also. That what all things we have to see about chart, how we try to understand the charts. I will teach through that. But before going into details of that, so friends, there are few things which are very very important in when we talk of intraday trading, and there are some rules which I have written here. So the rules are quite, it looks very simple, but friends, it needs a lot of discipline and patience to follow these things. And I would say friends, all those newbies or anyone who is in intraday trading, he must know these things or must write down these things somewhere in his uh, we can say some paper, some diary, and must read this thing before he starts to intraday trading, during intraday trading, and generally after making some profit or loss trade. One must go through these points. I would say that these points will help you have a discipline, and also understanding the your intraday concept actually. So that thing will help you have a, we can say, balance of mind. Otherwise, what happened? Most of the traders, whether they are in profit or loss, once in loss, so they have a different mindset. Once some people have a profit, they have a different mindset, right? Once a person has a profit, the person turns, the person gains, we can say, such a big overconfidence, that overconfidence kills the person. And once someone has lost money in stock market, in intraday trading, the person gets in under the control of deep fear sometimes. I am using the word deep fear. So fear and greed are the two, we can say, enemies of the traders. We have to control these things. So I would add here control, greed, and greed is the, we can say, most important, but fear also comes. Fear comes because of the losses. Greed, it's a human nature. Okay, so friends, let me read what all these things are. So first important thing is, friends, we must understand a risk. As you know, risk is in any field of life, friends. If you're traveling on somewhere through any means, through personal car or through public transport, by air, so there is a risk of accidents, and there's a risk of getting injuries, and sometimes it can be death also. So don't think that our life is without risk. Our life is full of risk, right? So just like our daily life is under risk, every day we go on roads anywhere. We cannot sit inside home. Even inside home, there are risks also. There are different type of risks. One can die because of a fall from a step on the inside the house as well. There are different things, right? We will not go in that thing. But what I mean to say that risk, we have to understand our risk. Here in market, we have a risk of losing money, and that money can be something that you have saved from years. So it can be that big loss also. That big risk can be there. So friends, we have to have a calculated risk, and we should not take more than 1 or 2% risk in intraday. Let me just write. Sorry. Don't take more than 1 to 2% risk intraday. 1 to 2% risk intraday is huge risk, friends. We can say it's more than enough. It should not be beyond 2%, right? So let us take an example, friends. If you we can say, suppose you are a positional trader. So even for, I'm just talking of for intraday trading, it should be 1 to 2% of our total capital. Let us say we have 50,000 rupees. So our 1% risk comes to be 1,000 rupees. 2% risk is 1,000 rupees, and 1% risk is just 500 rupees. So we can decide that we are about to lose 500 rupees, or we are about to lose 1,000 rupees in a particular trade. So we have to understand that thing. Before thinking of making some profit, we must think how much we can lose. This is a very important thing, friends. We must understand this thing, that how much we can lose. Generally, people come with a different mindset. They don't think of how much we can lose. They think how much we could make, or how much we should make, how much profit we need. They don't consider their profit may be 1%, but their losses may be 10%. So that is totally wrong concept, friends. We have to understand, if we are taking 1% risk, we can expect minimum 1%, and higher side we can go to 2 to 3% also in intraday trading. I would say that 1 or 2% in intraday trading is a huge profit. It's a huge profit, friends. Don't underestimate 1 or 2% intraday trading. 1 or 2% profit is huge. Okay, so there we need to have a control on our greed. That's one of my points, that control on greeds. People expect to become rich overnight, but just in one trade they want to make 5,000, 10,000 rupees profit. That's not possible, friends. We have to understand things. And if we go for that kind of trade, so there are chances of losing in same amount or in more than that also, if we don't take calculated risk. So we should take calculated risk in life and in intraday trading as well. So second thing is, friends, we must have a success strategy. We must have a strategy for success. If we don't have any strategy and we just go like open a terminal and start buying, selling anything, we saw something is rising, some stock we go and buy. If we saw some stock is falling, we go and sell. So that way we can't succeed. That's not a strategy. We must have some strategy, and we have to follow that strategy for months and years. I would say months and years. The biggest problem with people is that they run after strategies, and once they try one strategy that doesn't work, then the next day they try second strategy. In second day that also that works for 1 or 2 days, but after third day there is a stop loss. People go for next strategy. So people change strategies just like they're changing their clothes. So friends, you must have a solid strategy. You can modify your strategy, but don't change your strategy. I would say stick to one strategy and make it successful. Turn that strategy in your favor. See the loopholes in the strategy. Find out the drawbacks of the strategy, where they are lacking, what you are lacking. You try to find out. Try to learn from your mistakes. That's very important. And next thing is, friends, we must have a strategy for entry and exit. Entry and exit are very, very important. It's very important I insist on entry and exit, not only intraday trading, but also in positional trading and in investment also. We have to understand that we have to take entry at the right place at right point, and if we have taken an entry somewhere, we must have an exit point also. If we don't have a entry and exit strategy, even then we are not successful. We cannot make profit in intraday trading. So we must have a strategy for entry and exit. Let us take an example. Suppose you have taken risk of, generally we should go for 1%. From our entry level, we should take a stop loss of 1%. Okay, that's our risk. We can say, sorry, we can say that our exit point in case of the trade goes wrong. And we can apply the same rule to profit side also. Exit can be of two types. No? One, in case the trade goes wrong, we should have a risk. We should decide where we have to exit in case the trade goes wrong. So there we can take a maximum 1% risk in intraday trading. And in case some trade is in our favor, so even then we have to exit that, but that should be exited in at least 1% or near to 1% also. I would say that's also good if it gives profit easily. So you can book near 1%. And accordingly we can go for 2-3% out as well, but we have to see things. So we must have strategy for entry and exit also. And the most important thing, friends, stop loss. Okay, we have to understand stop loss. I would say a simple and beautiful line stop loss, that it's like trading without stop loss would mean you are driving a car without brakes. So can anybody afford that? Can anybody dare to drive a car without brakes? The answer would be no, a big no. Definitely it would be no. Everybody would say no. Then why trading without stop loss? So most of the people who lose money in intraday trading is all because they don't know stop loss. They don't use stop loss. So for your information, there are two types of orders which comes with stop loss. One is called cover order. Cover order gives you the facility of placing entry, or entry means either side, buy or sell side, and with a stop loss. You cannot place that order without completing stop loss order. You have to place stop loss somewhere. That is cover order. Okay, but you have to cut your position as per your, if it goes wrong, then stop loss will be hit automatically. But in case you are in profit and you get 1%, 2% profit, so you have to decide how much you get. Once you are satisfied, you are comfortable with your profit, you have to cut that position there yourself. Okay, so there is no, we can say, exit point. Now there comes another order called bracket order. Bracket order is the most commonly used order these days. That's a wonderful order, and that places 3 orders at a time. One side there is a entry level, then it places, you have to place one. While you are placing that order, you have to first you have to decide where you enter. You can go with the market price as well, or you can place some limit order also at what price you want to enter, and you have to fill your stop loss and your target there before entering into that, before executing that order. I mean, that's a 3-in-1 order, and the most commonly used order these days. The best one, I would say, we should go with that, and we can modify our stop loss and targets later in case stock turns in our favor. So we can trade stop loss at cost and even at high levels, and accordingly we have to shift our exit point, that is profit. We can go on increasing that. So I generally give my calls in that way in my Telegram channel. Same trading discipline. You can search that trading discipline. You will get my channel, right? But there is a under slash between trading and discipline. So you try to search that. You will get it easily, right, friends? So we have to play stop loss. Stop loss is very important. Next comes the revenge, friends. Normally, what happens when people come in the market after losing some money, their mind gets in revenge. They think of taking a revenge from the market, and that's not advisable, friends. Don't think of going in revenge with the market. You cannot take revenge with the market. Market is supreme. You cannot fight with market. Don't try to fight with market. Fight with yourself, your brain, your mind, your strategy. Fight with those things. Just improve those things. Right. But you cannot revenge. If you have a revenging mindset, I would guarantee you will lose everything that you have saved. Because someone, if if someone comes with a revenge trade, na, so that person is definitely going to take wrong decisions, wrong entry, wrong exit. So definitely person will lose. So never ever come to market with this revenge. Whatever loss you have had in past, forget that. If you have to be a successful intraday trader, or even I would say positional trader, so you have to have leave your revenge. You have to have to forget your losses in the past. Start afresh. Whenever you want to play in market, you have to start fresh. And remember, the money lost is not easy to recover. So don't come with the mind that you have to recover it. Just come with a mindset that I can make some profit with calculated risk. So decide how much I can risk and I can get some reward. Just come with that mindset. If you play with a proper strategy, proper understanding, proper calculated risk, so you can make profit definitely. But we have to understand these things. So next part I told you just now that we have to control our greed. Suppose some stock gives you a profit of 1%. So you must trail stop loss cost to cost. Or even you can keep it close to some profit level. Suppose stock gives you a profit of, let us say, 10 points, means 1%. Okay, so you can cover 50%. That means you can trail your stop loss at 5 points level, so that 0.5% is profit is locked. And if it goes higher, then you can shift your trailing stop loss to 1%, and that way you can keep greeding. But you can greed, that's called controlling your greed. You're greeding, but you are doing it along with your you're locking your profits also. So if you have to greed like that. Okay, so you have to control your greed, right, friends? So that's a fear and greed. I told you these are the enemies. Fear comes when someone has lost huge money in past, right? Once a person has lost huge money, the person even don't dare to take a trade. Whether the trade looks so good, it's a very good trade, but person don't even dares to enter. And if someone enters in fear, the person will exit with 2 3 points and close the trade. Maybe the stock gives him 10 20 points also. The person could not dare to wait for that. The person don't have that kind of patience or that kind of we can say the guts to wait for that level. The person is under the control of deep fear. So fear comes because of the uh, you know huge losses in market, and greed is a human nature. We are human, we are greedy. Everyone is greedy, I am also greedy, everyone is also greedy. Greed is must, but controlled. Control it. Now, before I have told you some basic rules of the intraday trading. Now, let us shift to our charting side. That is today's main important topic. But I am teaching you intraday, so it's very important to tell you these things. So, friends, I am going to tell you about a very important site, charting site, and the name of the site is Chart Inc. We are doing Chart Inc. Ing, but here the site is Chart Inc. Ink. Okay, ink, the ink used in pens for writing. So this is charting. I have already opened this site, so let me freshly open it. We will go to a browser and type here charting, CHARTINK, charting, and just enter. So friends, you can see that a site charting.com has appeared. So there you can write charts, skinner. So let us go to charts directly. Click here on charts. You can log in this site, this is a free login also. You can make your login and you can save your charts as well. You can save your charts if you have any. So I am directly shifting to charts. Okay. Now see what all data we have it. The site is showing us directly monthly chart of the Nifty actually. This is the monthly chart of the Nifty. And I think everybody is aware of the Nifty. What is Nifty? It's an index I have already made in a previous video. In the third video I have told in detail about this, right? So you can see the chart of the Nifty. This is, we can say, the overall growth of the economy of our country. It is reflecting the economy. Simply speaking, it reflects our GDP growth or the economy of the country. So it has given a very good up move. Now there are some whipsaws also. The up and downs are there. If market can never run straight, it may give some short time downfall, but then there is a phase of long time upside. Right. So we have to remember this thing that market can't travel in one straight line. There are day-to-day up and downs are there. So we have to, and intraday trading is actually playing on those up and downs. Okay, friends, so let me show you that what all things are there. So there is a column of, we can say, option of minimizing indicator. So here, if you click on that, your indicators point part will be hidden and only chart would appear. But when we click here, so we have to select few things from it. So first thing that we have to select is period. So it shows all data. But as we have to go for intraday trading, we cannot go with all data. We will go with let us say we go with the 2 days chart or 3 day chart, and then comes the range. It can be from, we can say, a few minutes to 1 month. See, it can be from 1 minute, but in this side, this is a Dow, it's a free charting site, but it does not allow 1, 2, and 3 minute chart. If I click on 3 minutes, it would show that 1, 2, and 3 minutes scans and charts are allowed for premium members only. So if anybody wants these time frames, then we have to go with, but there is no need. No need, simply don't go for 1 to 3 minutes, right? So let us go to, we will go with 15 minutes time frame. And then comes the type of chart is candlestick. The most reliable chart is candlestick chart, friends. So we will go with candlestick chart. So see, I will explain later why they are candlesticks. So let me show what all options are there. We can go with other types of charts also. There is a Heikin-Ashi chart, and whenever we select any type of chart, or we have to select that particular chart for time, for a particular time period, we have to update chart from there. So just click there, your chart will open in that way. See, so this is our Nifty chart of today, but Heikin-Ashi chart looks different. Let me show you Nifty chart in candlesticks. That looks different, and Heikin-Ashi chart looks different. So friends, we have to understand these charts. Heikin-Ashi chart is somewhat that shows an average price of the stock, and that gives some kind of, we can say, it gives us an indication whether the stock is going one way or not. It just gives, but that's movement would be very different. While in live market, you will see that it's a different chart. Okay, because price will not be updated instantly. And for your information, friends, this charting site is an end of the day, EOD means end of the day charting site. Anytime you open this site, you will get the stock in a particular closing price of the previous level, previous time, and it would not reflect the prices moving up and down instantly. Means it's not a live charting site. We have to understand this. This is not a live charting site. It's an end of the day charting site. Okay. So if this is clear, now let us shift. See, there are different types of charts, and let us see. Sorry, let us see some more types of charts available there. So we can see closing price and all. So see how it looks. It looks like a line chart. So there are different types of chart, friends. But the most reliable ones are, see, OHLC is a different chart. Let me show you how it looks. It is somewhat different. Okay, you can see this is a chart. So we have to, there are different kinds of charts, but I'm just telling you, just giving how we can search particular chart. So let us make a study about candlestick charts in little brief. And I will close this thing. We don't need this thing in open. So friends, we have to select, this is by default, this is Nifty chart in 15 minutes. So today Nifty was in quite a good uptrend. You can check a date. And friends, let me just tell you about that there are two types of candles. Okay, you could see there are red colored candle and the white colored candle. These red colored candles are the bearish candle. Bearish candle starts from top and moves down. So means if you look at this portion, upper portion of this chart, there is a date, time, open, high, low, close, then change percentage and the volume as well. So you will get this information whenever we click on a particular candle. So why this chart is called candlestick chart? Because these bars are look like candles. Some candle you might say they don't have wicks. Some candle you will say they have big wicks. They have wicks in both sides and all. Okay, needles as well. Wick is called, see, this candle has a wick in the downward side. This candle has wick in both sides. There are candles which have small wicks or no wicks. Look at this candle, no wick. So we have to understand these candles. So these red colored candles are bearish candles, means these candles open at high. If we click, place this cursor here, pointer here, you can note down here their prices. So see, this candle open is what, high low is what. So you can see open is, let me just tell you, open and low. Open is 11,783.35 and low is 11,758.70. Means this stock has opened, this candle has opened at high level and closed at lower levels. Okay, so that means bearish candle open at higher level and it may some higher further side from the opening price. It may go upside and that turns into a wick, and then it comes down and closes at lower level, and it may go down below that also. You can see in this candle it has made a wick downside also, so it make a low but closes that level. So this main portion of the candle is called the body, main body of the candle. Okay, so these red candles are bearish candle and these white candles are bullish candle. Here in charting side, the bullish candles are shown white. But if you see in some other charting sites in charts, so there the bullish candles are shown in green color. Okay, but in this charting side, you will see these are the by default colors and we cannot change the colors of the candles. In some other charts, we can change the colors as well. Okay, now let us move to see friends. I have just opened 2 days chart. This is the 19th June chart. Means yesterday. This Nifty has opened here. It gone up to this level, but after 15 minutes, after 30 minutes, that is started. It remained in a range, and after this, breaking below this range, it has given a fall. See, there was a range. We can place some lines, horizontal lines. So see, once this range is broken, the Nifty has started downward fall. So friends, we have to understand this. While intraday trading, we have to understand there is a range, and once range breaks, either side we can go and trade in that side. Means if someone has shorted this Nifty below this range is broken and keeping stop loss at the high level, at this level, so the person would have made good money, because see, by the closing time it had given a very big fall. It's from let us say it's from here. It's from 770 somewhere, 11,770. It given a move up to even further down as well. Yeah, finally it came down to 11,624. So means a huge fall was there yesterday, and today gives a huge upside movement also. It was the closing price yesterday. It opened. We can say there was a gap of opening today morning. It's today's first candle is bearish. There was a gap of opening, but it eventually filled the gap with second candle, and then it gave an upside movement. Right. So friends, this is all about this side. So we can make use of this side. We can study charts and try to understand this. And I would say you practice a particular chart. I have just shown you Nifty. We can check anything like let us go with the Reliance Industries. So you can just type this is a search area. So here we will type and we will get list of stocks. So just click there. So we will see the chart of the Reliance. Let it upload. Yeah, now we have the chart. So see, even Reliance has fallen down because yesterday market has fallen down. So every stock has fallen, and today Nifty has rose. So most of the stocks have rose up. Right, friends. So we have to understand this, that Nifty is mother, and generally the children follow the mother. Just remember this word. If Nifty is up, so we can say that stocks can also move up, but that's not a rule. Some children can go against, we can say, mother also, generally when they grow bigger. Okay, so they don't listen to parents, right? Okay, so friends, I have made a similar video, same video in Hindi language also. So those who are comfortable in Hindi, and they can go and watch that video. I posted that video in today morning, and I am making this video in English in evening. So I have made this video in English for my English listeners, for English viewers, and I have made the video in Hindi for Hindi viewers. So I am making in separate languages, so there is no wastage of time, and we could make full use of our time. So hopefully friends, today's video will be a very good video, very good learning for those who are totally newbies. But yeah, those who already know will think that they would say that it's a wastage of time. So friends, I would say that this video series, Intraday series 1, as I have told you, this series is for newbies, those who have no knowledge of market, and I have made this series only for those people. Right, so this series is only for those. Through this series I want to make your foundation very, very strong. Right, friends? So let us recap what all rules I told you. That always remember, write down these rules somewhere in your diary, somewhere in your page, and keep posted in front of your terminal, and keep reading these rules from time to time. First rule is take calculated risk. Maximum risk of 1 or 2% of your total capital. Then must have some success strategy. Then must have a strategy for entry and exit. Must always play with stop loss. Stop loss is like trading with a stop loss is like driving a car without brakes. Nobody dares to do that. And next, never ever revenge with market. Never try to gain your losses, recover your losses. Recovery trades, they are very rare and very dangerous trades. Don't keep that mindset. Then must have a control on greed and fear also. Fear comes because of the uncalculated losses in past, and greed is the human nature. We can greed, but with a smart way, as I told you about trading concept. We can keep trading stop losses higher levels, uh, towards our target side. So thereby keep locking your profit. So with this note, I will close the video here and hope it would help you a lot. Wish you a good luck, friends.